Welcome back, everyone. Today, we're diving into a brand new explainer, and we are tackling the wild, often totally chaotic world of cryptocurrency. But look, we're not going to be talking about frantic day trading or those crazy moonshot predictions you see all over social media. Instead, we're looking at a real-world case study of methodical, disciplined investing for a young crypto project called ASTER. We're going to break down the exact math, the mindset, and the hardcore structural rules that one investor uses to literally strip emotion entirely out of the equation. Okay, let's dive right into this. We're sourcing this case study from a YouTube channel called TheAbrahamCryptoLand. And honestly, there's a pretty heavy dose of irony here. You see, this channel is completely dedicated to building an investor's mindset, focusing on long-term discipline, patience, rigorous risk management. Yet the banner image greeting visitors is this terrifying, steep, crashing red stock chart. It's almost like a warning sign. And get this, the creator is quietly building out this highly structured strategy, documenting a real investment journey in front of a super modest audience of just 16 subscribers. It just goes to show, sometimes the most methodical financial education isn't the loudest voice in the room.
And that quiet discipline, it's perfectly summed up by this quote straight from the creator. Nobody can predict the future. As investors, we can only evaluate probability and manage risk. Hit the nail on the head, right? This is the core thesis of the entire strategy we're unpacking today. They are hyper-focused on the reality that success in investing, especially in something as crazy volatile as crypto, is all about structure and mathematical probability. It is absolutely not about hype or trying to perfectly time the market. It's a massive mindset shift, really, from just gambling to actually managing risk.
So that brings us to Section 1, the ASTER opportunity, and evaluating probability.
And this brilliantly illustrates exactly how they weigh that probability. So ASTER is a very young crypto project. Nobody really knows what its future holds, but there's a highly calculated reason for taking on this speculative risk. The creator draws a direct historical parallel here. ASTER is backed by a major cryptocurrency exchange, which is incredibly similar to how the wildly successful token BNB was originally tied to the Binance ecosystem. Now, to be clear, the creator explicitly says this doesn't guarantee ASTER will follow BNB's exact path. But remember our core thesis. We're not predicting the future, we're evaluating probability. Having that strong exchange backing provides a much higher probability of ecosystem growth, which totally justifies cracking the door open for this investment.
All right, so the door is open for ASTER. But how do we integrate it safely? Let's move to Section 2, the power of diversification and the math of mitigation.
Now, what's really interesting here is getting to look under the hood of a totally transparent, real-world portfolio. This is the exact planned allocation spread between June 2026 and June 2027. Look at how this defensive wall is built. We've got a massive 40% allocated to Bitcoin and another 20% to Ethereum. So 60% of the entire portfolio is anchored in these established digital assets. Then the remaining 40% is split between midcaps like XRP and Bitcoin Cash and altcaps like Solana, BitTensor, Linea, and our case study, ASTER. Those massive walls of Bitcoin and Ethereum, they are specifically engineered to absorb and mitigate the extreme volatility you're naturally going to get from those smaller altcaps. It's diversification in its purest, most mathematical form.
Which brings us to one single, absolutely critical number, 5%. If you look back at that portfolio breakdown, ASTER makes up exactly 5% of the total pie, no more. The creator makes a stark point here. It literally doesn't matter how promising they think ASTER is. The allocation is strictly, rigidly capped at just 5% of their total crypto capital. This is exactly where so many investors fail, right? They fall in love with the project, convince themselves they can predict the future, and completely overexpose themselves. By locking this in at 5%, our investor ensures that even if ASTER goes to absolute zero, like completely wipes out, 95% of their portfolio is totally fine. That is the true essence of disciplined risk management.
So now let's look at how they actually go about buying that 5%. Section 3, tactical accumulation, or the micro strategy.
Let's see how this builds, because this is where the strategy gets incredibly granular. Even within that tiny 5% macro allocation, this investor absolutely refuses to just dump all their money in at once. Check out this step-by-step fractional buying process. Step 1, as we said, is establishing that 5% hard cap. Step 2 requires some serious patience, waiting for ASTER to hit a highly specific price target of 55 cents. But Step 3 is the real game changer. When it finally hits that target, they only invest 10% of their allocated ASTER capital. Why? Because they know they can't predict the market. If the price drops below 55 cents, they still have 90% of that capital sitting there ready to accumulate at even lower, better prices. It completely removes the stress of trying to perfectly time the absolute bottom.
So the crucial takeaway here is that true long-term investing isn't about guessing the top or chasing the latest hype train. It is entirely about having a strict process, managing your downside risk step by step, and sticking to the math. And what's just so fantastic about this case study is that it's not just theory. The creators out there documenting every single step of this strategy in an ongoing YouTube playlist, just putting their whole process out there for anyone willing to learn.
Which leaves us with a final thought for today's explainer. We've seen how one investor uses this super rigid framework to basically strip all the emotion out of a wildly volatile asset class. So turning the mirror on your own strategies for a second. In a market that is constantly driven by hype, flashing red charts, and really loud predictions, do you have the discipline to just follow the math? Think about where you might apply this kind of fractional risk-managed thinking in your own life. Thank you so much for joining me to unpack this fascinating strategy. Until next time, keep learning,